Hello, this is Joe Pryor, the virtual real estate team in Oklahoma, where we specialize in new residential construction for investors in the Oklahoma City and the Tulsa markets. You know, one issue that we have nationwide at this point, although not so much in Oklahoma, because we are very, very affordable, is the issue of affordability. You keep hearing this term coming up, don't you? And very recently, President Trump brought up the idea of, well, let's just create a 50-year fixed rate mortgage, and that'll solve all the problems. Well, I'm here to tell you that won't solve any problems whatsoever. In fact, it may be worse. And here's the thing, okay? You know, and depending on how much you put down on a mortgage, for instance, that's going to change what your rates are going to be, or how long the term is. If you do a 15-year loan versus a 30-year loan, you're going to get a better interest rate on a 15-year loan. Now, all loans that are fixed rate through Fannie Mae can be paid off early, no problem. If you make a lot of money, you want to pay it off in 20 years or 8 years or whatever years you want versus 30, you can do that. So let's evaluate what 50 years is going to be. And this is where this is a tremendous fallacy. This wasn't very well thought out. I think it's just one of those times when the president just kind of off the cuff said, oh, let's do a 50-year mortgage, and just really didn't do the math. So here's the math. All right, if you take a 30-year mortgage at a fixed interest rate of, let's say, 6%, if you're an investor, let's say it's 6%. All right, let's say that on that same mortgage, you say, well, no, I don't want to do a 30-year, I want to do a 50-year. So let's say that the 50-year mortgage is just 1% more. Let's just say it's 7% instead of 6%. I'm just using this as an example. Well, guess what? Your payment is actually higher. Not by a lot, few bucks, but you're not saving any money. So the point is very simple. It does not solve the affordability factor. It is a risk to give you a mortgage for 50 years, and you've got to build in the risk. Now, I'm probably going to tell you that if you can get one for 1% over a 30-year, you're doing really, really well. So think about the fact that if it's 1.5 points, you may be paying $100, $150 more per month. That is not solving your affordability. You've got to get your finances in order. Now, for basically an investor, which is what I deal with, you know, all that interest up front is not going to make a whole lot of difference, because essentially, you know, the way that you avoid taxes is with your 27.5-year depreciation schedule, and also the money that you put in to improvements or repairs. So if you're not lowering your payments at all, it's not helping you. And then, you know, a $250,000 house for an owner occupant might end up, if you keep it for 50 years, which is doubtful, you're paying $850,000 in interest. You're wasting your money. What you want to do at some point is being able to pay off mortgages, pay off debt, be debt-free at some point when you get older, so you can take care of yourself, take care of your spouse, and have a good time. So understand that this is never going to happen. The 50-year mortgage makes absolutely no sense, does not have anything to do with the affordability problem. What can do it is the large builders. If you want to buy new construction, what they're doing is putting out $40 to $60 million to buy packages of loans to get you down a full point or a point and a half lower than standard rates in order to get you to buy the house. That will save you a lot of money cutting down on the interest rate. So don't fall for this 50-year thing. Never going to happen. Look to builders that are buying down loans and giving you a heck of a deal.